One look at shares of Tesla or NIO, and you might think the EV stock trend is overpriced, but in reality, it could just be getting started.
Electric vehicles have remained popular in the 21st century, with roughly 28% of all cars made in the country being electric. Electric vehicles have slowly grown in popularity, with an estimated 24 electric and hybrid automobiles on the market. Hello everyone, welcome back to our channel. We are here today with a new video on the best EV stocks to be bought in 2021.
To thank you for watching this video, we're offering you an absolutely free training webinar. Do you want to learn the secret of improving all aspects of your life and unlocking what you're really capable of? The legendary Bob Proctor spent over 57 years learning this one thing and is hosting a free webinar where he reveals what he's learned and what actually works. He'll teach you the law of compensation, a secret only the mega wealthy know of but not taught in our educational system, and the impression of increase, the law of laws that will increase areas in all aspects of your life, whether it be in health, relationships, or wealth. Right now, the first 200 people to use the link below will get access to this free webinar. Now, let's get back to the video.
Electric vehicle stocks have soared in the aftermath of the rapid surge, but not all are made equal. Some car stocks are more prepared for an EV futures than others. Here are the best electric vehicles manufacturers. The best stocks to buy are those with solid track records of profit growth and market outperformance that are generating bullish charge patterns. Electric vehicles or EVs have recently gained popularity, particularly among investors. Investors have been flocking to electric vehicle stocks as the globe strives to become green. As EVs address one of the main sources of carbon emissions, resulting in an increased trade volume and, in some cases, significant price growth. Furthermore, many people believe that the sector's huge advances are only the beginning. Meanwhile, Chinese electric vehicle stocks such as NIO and XPeng sells tens of thousands of vehicles each year but are currently unprofitable. Then there are the traditional auto titans such as Ford, which are evolving into electric car powerhouses. The burgeoning universe of electric vehicle equities isn't limited to car makers. Car batteries and recharge stations are made by other companies. ChargePoint and Blink Charging are two of them. Magna suppliers part for NIO and XPeng, as well as battery enclosures and e-drive gears. To begin with, the electric vehicle business is well known for the corporation's Tesla Incorporated. As a result, it's no wonder that investors have flocked to the stock, sending share values soaring. Tesla's stock price has risen from around $171 per share in February 2020 to $900 per share in early 2021. Although it's too late to profit from those gains, many analysts predict this high-growth stock will continue to rise in the future. Following the company's first quarter financial release, Musk emphasized rising car deliveries, stating that the statistic would climb by 50% year-over-year through 2021. At the same time, the company has a number of catalysts in the pipeline, including new cars, which have highlighted in the fact that vehicles are in great demand and only cover roughly 50% of the addressable market. As a result, experts anticipate the company releasing new model that will enable it to reach a wider audience. The shares of Tesla have an EPS rating of 74 and a composite rating of 80. Another stimulus in the Tesla Cybertruck is an electric truck with a sleek new design that has been eagerly awaited by investors. The Cybertruck is likely to be high in demand because it is one of the first electric vehicles to hit the market. The second is NIO, which is Tesla's most direct opponent. NIO is often regarded as China's Tesla right off the bat. In terms of stock market growth, the company is unquestionably one of the most successful EV companies today. Investors in electric vehicle stocks are used to corporations announcing new products and services during major events. The firm is a Chinese electric automobile startup with a number of products on the market that are gaining traction. NIO is in the end a double emerging market bet. The company is not just involved in the developing electric car industry, but also based in China, an emerging economy that is rapidly becoming established, which is a recipe for exponential growth. NIO was initially a source of concern for investors. Sales have been plummeted as recently as 2019, and many felt the company was on the verge of collapse. Last year, however, that all changed as sales rebounded dramatically, and the trend is predicted to continue through 2021. Sales had surged by more than 350% by January 2021, boosting the stock's worth. The NIO ET7, a sleek, totally electric vehicle, piqued investors' interest even further. In May, the company sold 6,711 new vehicles, a 95% increase over the previous month. The ET7 is being eyed by investors as a potential blockbuster. NIO's continued growth into European markets is another driver. If you've been keeping up with NIO's news, you are aware that the business announced its entry to the Norwegian market in late April. Not only that, but the corporation also revealed this week that it will enter the German market by 2022. More importantly, NIO's battery-as-a-service business model may position NIO stock to compete with other top EV firms on the stock market. The stock is becoming more and more of an opportunity as demands continue to rise. NIO continues to innovate and a global focus on renewable energy grows. When you add in the fact that the company is rapidly reaching profitability in a dual emerging market, it's difficult to overlook the stock.
To thank you for watching this video, we're offering you an absolutely free training webinar. Have you ever wondered how to end procrastination and self-sabotage so you can unleash your full potential to live the life you deserve? #1 best-selling author and high-performance coach Peter Sage is hosting a free webinar where he'll teach you how to increase your wealth with less time and struggle, and also how to hyper-boost your growth and success so you can finally break out of any rut you find yourself in. Right now, Peter and his team are offering a free $100 gift to anyone who doesn't find his webinar as the best use of their time within the last 5 years. Now, let's get back to the video.
Another electric car startup making a splash in China is XPeng Incorporation. XPeng could be considered a Chinese counterpart of Tesla. In addition to producing electric vehicles, the company is working on autonomous driving technology and runs a charging network. XPeng now has 1,140 charging stations in 164 Chinese cities. This gives the corporation a substantial competitive edge in its home market because it allows to provide consumers with free lifetime charging services. The G3, a super long-range SUV that can drive 323 miles on a single charge, is the company's most stunning offering. The P7 super long-range car is also available with range of 438 miles on a single charge with a sophisticated infotainment system and user experience. Both vehicles have hands-free parking and an artificial intelligence-assisted drive, enhancing the safety and convenience of electric automobiles. XPeng also announced the successful launch of its XPilot 3.0 and navigation-guided pilot highway solutions in January. In addition to these outcomes, customers' utilizations is now high and the corporations may be able to increase revenue by monetizing the software in a small way. Subscriptions should be robust and long-term as a result of additional updates and enhancements. XPeng has suffered this year, just like the other names on this list. With plans to put LiDAR systems into the productions this year, the business is on course to become the first car maker to mass-produce an EV with LiDAR, solidifying its positions as the industry leader in smart technology for EVs. The electric car stock is now down 40% from its January highs and more than half from its 2020 highs. Though it appears to have hit a short-term low in mid-May, XPeng is worth a look, with an excellent revenue growth and plans to expand into international markets to achieve even more growth. Churchill Capital Corp 4 is the fourth one. Churchill Capital Corp 4 is another EV stocks that have been making large gains in the stock market this week. This news comes as the firm gets closer to merging with Lucid Motors. A special meeting of shareholders will be held on July 22nd to vote on the proposal. The merger with Lucid Motors could be confirmed as soon as the next day after the vote if the transaction is authorized. This is really exciting news for the space industry, as Lucid Motors is undoubtedly one of the greatest competitors to Tesla. In a deal worth $24 billion, the Churchill Capital 4 SPAC will take Lucid Motors public. The CC4 stock has yet recovered from the EV stock sell-off. Based on its attractive value and growth prospects, CC4 stocks appears to be a solid long-term investment. Shares in Lucid should be purchased today by investors who feel the company has the ability to increase productions and delivery. Ford, the fifth and the final pioneer in the automotive industry, is another trailblazer. The company has weathered the ups and downs of the car industry and continues to be a leader in innovation. It's not a business that will pass up an opportunity. As a result, the company is vying to be the first to market electric automobiles. Ford now has 2 electric vehicles on the market, the Mustang Mach-E, which is the king of the muscle car segment, and the Focus Electric. The Mustang Mach-E demonstrates the power of electric cars by reaching peak acceleration in under 1 second and acquiring no planned maintenance, lowering the cost of ownership. The second is E-Transit 2022. The commercial vehicle has plenty of room for transporting packages or other business needs. Unfortunately, it falls short of the BrightDrop EV600 in terms of range, just 126 miles on full charge. These are only the first of many 100% electric vehicles that this auto industry pioneer is expected to release in the near future. Furthermore, the company just announced a collaboration with Google. Together, the two businesses will use visual AI to upgrade Ford production's facilities, create new purchases experience, and develop new offers based on connected vehicle data. Because the future auto industry will combine technology and traditional mechanics, any player in the game will benefit greatly from having a partner like Google on their side. Ford has 81-point composite rating and 70-point EPS rating. It's on famous IBD leaderboard, a ranking of stocks with the most upside potential. This traditional winner is getting even more appealing now that it has Google on its side, making it one to keep an eye on. So, that's it for today's video. We'll be back with more fun tidbits shortly. Please like this video and subscribe to the channel for more of these.